All right, so my next guest says that the sharp flash down here on November 7th, right, that was greeted by intraday dip buyers may have set the stage for a year-end rally that takes the S&P 500 to at least 7,000. Let's bring in now Kobeissi editor-in-chief Adam Kobeissi. All right, Adam, let's look at this chart here for a moment because I'm not a candlestick expert per se, but that's one of those. Some say it's a hammer, right? But that was the day, right? The buy and dip folks did show up, and we've been moving up just about ever since.
Yeah, so that was the day when the whole Trump tariff thing came out with China in early October, and then we kind of dipped down again. And all these dips have been so brief. As soon as we see these like rapid downswings that seem to be almost like emotional sales in the market, we've just been averaging into more positions on the long side, calling for the S&P to go to 7,000. And I think right now, I mean, this is not the market you want to fight, right? You have over $600 billion a year in capex just from the Magnificent Seven.
Right.
That's insane if you think about it. I mean,
the irony, though, is a lot of people see that as a negative.
Well, yeah, but the thing is, the stocks that account for almost 40% of the S&P 500 are spending almost $100 billion each per year on capex while raising guidance, right? On average, that is. So basically, I don't think this is the kind of market you want to fight. We have a lot of momentum. More rate cuts are coming. We've seen another rate cut in December. And then you have this whole stimulus thing now up in the air. I think it's a great time to just ride the trend in equities.
What about Google? I know you did some calls or something on this recently. You still like this even at this level?
Absolutely, yeah. So we've been pretty bullish of this name. It kind of pulled back a little bit with the broader AI trade over the last couple of weeks. Dip buyers already stepping in. I think we see 300. I think, look, Google was the one stock that everyone was saying they missed the AI run, or they're late, or they're trying to catch up.
Right here in April, right? And then, I mean, they were going to.
And they came right out of left field when no one was expecting
it.
They
right took, AI was going to kill search. The stock collapsed. The next thing you know, they're the best AI play out there.
Absolutely.
Just like that.
And a lot of these AI browsers are being built on Chrome. That's what you have to realize. So I think this name is going to continue to shine. And they just raised their capex estimates to, I think, $93 billion for the full year. Which
I got to get
incredible.
your thoughts on nat gas. We've had a couple gaps higher. You know, we've got an energy thing, need for these data centers, but you're not as bullish on it after this big move, are you?
So yeah, I mean, we had a big squeeze higher. This kind of happens sometimes around this time of the year because of the winter weather and just some of the uncertainty around how much demand there's going to be. But at the same time, we have a pretty big supply glut. Inventory is around 5 to 6% above where they were last year, and this has been the case for the last few months. I wouldn't necessarily be chasing the natural gas rally, but also if you're playing it to the downside, you got to manage your risk because around this time of the year, we have these big chaotic
some
swings.
folks are talking $5 again because of the data center thing, right? The energy thing. They're saying, hey, you got to feed these things, these beasts some energy. Okay.
Right.
The youngest gold bug in history. I don't know if you're still the youngest. You got older since I've known you, but gold had this huge run. You were in it. It's pulled back. It's turning around again. You still like it. You got
absolutely,
back in, right?
yeah. So our big call was always gold 4,000. Now our big call is gold 5,000. As we pulled back into 3,900, we bought that dip, calling for around 4,400. I think we see 4,400 by the end of this year, maybe sooner. And I think the backdrop for gold is just the best it's ever been. It's only gotten better, by the way, since this pullback happened.
I got to ask you about the miners, right? Because I got into miners early. And they didn't move. Gold moved. My mining positions didn't move. Now the miners are on fire.
Absolutely, and we've been bullish of the miners. I think they not only have they caught up, but they're actually starting to lead now. They're in some days outperforming gold relative to what they were doing earlier in the year. And I just think all precious metals, gold, are going to continue to kind of push higher, along with the miners and anything associated with it.
Okay, got to ask you about bonds. TLT is a play here. So this, you think yields are going to come down?
Absolutely,
right?
Yeah.
We crack under four in that 10-year. You think maybe that really will spark a big move?
Yeah, so we've tried a couple times, and it's kind of finding support around there. I don't necessarily think we go to 3 and like some huge crash in yields, but I think as long as there are these signs of the labor market cracking, which there are a lot of signs of this, I think unemployment would be right around 4.5% right now if we were receiving that government data that we haven't received during the shutdown. As long as that happens, I think both the short and long end of the curve are going to continue to kind of be capped. I don't necessarily think they're going to run to either direction too much, but I like TLT. I think we've been calling for 93. I think just a slow, subtle move higher is a good place.
4.5% unemployment. That would mean the Fed, in your mind, is behind the curve here?
Yeah, they're clearly playing catch up, but also on the other side of their mandate, right? Inflation's running at 3% high. A lot of over 50% of CPI components are now running above 3%.
Right.
So It's this tough situation where you're cutting into stagflation, but at the end of the day, I think that my view and my line has been all year, own assets or be left behind, and I think asset owners will continue to be rewarded pretty much all the way around the board.
Good stuff, my man. Good stuff.
Thank you, Charles.
You know, I'm digging that watch, baby. Congratulations.